Hi everyone, thanks for joining. My name is Yaniv. Live on YouTube, Trading Room for Monday, June 6th. The setup here is a little bit new for me. I'm usually broadcasting from my computer, so I apologize if things take a little bit longer. If you have any questions, obviously the chat is open, and I will soon share the charts and start the stream. Of course, if you have any questions, any concerns, anything, just write down in the chat. A quick disclaimer, this trading room is for educational purposes only. Anything I give here, anything I say is my own opinion, I'm not giving any trading advice. Any trading recommendations, simple analysis, mostly technical analysis, a macro overview, and of course, any trading decisions you take or make, use your own discretion. Do not risk money you cannot afford to lose. And with that said, let's start. I hope you can hear me well. So hello to everyone joining. And let me just share the charts. And again, any question you have, feel free to write it down in the chat box on YouTube. Alrighty then. So I'll go over currency pairs, some commodities, some indices. We'll go over, with the time we have left, we'll review the economic calendar for this week. I think one of the most important things we can look at is, or wait for, is the CPI, the Consumer Price Index, which will define the inflation for the month. Some say inflation has peaked. I find it hard to believe. I think inflation will continue, especially with crude oil and other energy prices rising. So definitely we are expecting higher prices and more turbulence and volatility in the markets, both in the Forex market and of course in the equity and bond markets. So let's go with a bird's eye view over let's start with the Forex market, and then we will go over some other assets as well. Any questions you have about trading accounts, about resets, about something wrong with your dashboard, about withdrawals or deposits or anything like that, please contact support, help or support at the5ers.com, and they will assist you. Because time is short, I obviously cannot help each individual or each trader with one's specific questions or requests. All right, so euro dollar, as you can see, and let's go over the monthly chart for a sec. So euro dollar, as you can see, has broken below a very long-term trend line, the red line, which is a 20-year trend line, and the blue line, which is about 6-year trend line. It has broken and closed below both of them and tested them from below. The overall trend, the long-term trend, is obviously bearish, but a few recent candles may produce some demand zone here below, around the level of 105 to 104. Overall, we may expect some more tests around this level. This is a big demand zone that has been broken around the level of 106 to 107, more or less. It has been broken, but we can expect some more sideways movement. As you can see, the moving averages are bearish. they're a little bit too far. The price is far away a little bit from the moving averages, and we can expect some more retests, either of the blue line, the shorter trend line, or the longer term trend line, the red line. But there's a lot of war going on here between the bulls and the bears, the buyers and the buyers and the sellers. So expect more volatility in euro dollar and other pairs, other major pairs as well. Last week's candle is a bit bearish in a way. So after a couple of weeks of strong movement, we may see some consolidation and maybe even a correction, but I do expect more sideways or a little bit of an upwards movement before continuing down. The overall trend is definitely bearish. Now, pay attention to the fact that we are found at around the this strong support level around 103 to 104. So again, it's not a temporary, it's not a small support, it's a monthly support or a yearly support. So definitely buyers were waiting here for this level, and we may expect more volatility around these zones. On the shorter time frame, again, the trend is not very clear. A lot of sideways movements around this zone, but for now there is some support from the daily moving averages, and on the hourly charts, as you can see, or the 4-hour chart, no clear trend for now. If you are day trading, if you are looking for a specific move or a specific entry, wait for some area of support or resistance. For example, around, let me just add something here. Let me just add this rectangle. Where is it? Oh no, it's here. Yeah, sorry. So either around this zone here, more or less, where there's a supply, or around this zone here where there's some sort of demand or support. Okay, don't just enter in the middle of nowhere, because it will clear you or kill your position. No reference for your stop loss, or nowhere you can place your reference for an exit. So that's a little bit about euro dollar. Again, not a very clear trend at the moment, but after last week's candle, we may see some more downward movement. The immediate demand zone is below, around these candles. As you can see here, the connecting point between the down candle and the up candle, that's where the demand zone has been formed. So if euro dollar goes down all the way to this area of 105.4 and gives you price action, this is a great area to look for a long position and continuation to the upside. Dollar CAD, by the way, I'll speak in a few minutes about it. Pound dollar as well. The overall trend is bearish, but that doesn't mean that after last month's candle we cannot see more movement to the upside. As you can see, it touched this demand zone, or this support area around here. You see this small demand zone. It touched it and immediately bounced. It stopped last week around or just below the 9 EMA, the moving average on the weekly chart, the exponential moving average of 9, and reacted. But if it crosses above it, above the 9 EMA, and closes above it, we may expect more upside movement. And again, after last month's candle, we may definitely see more momentum to the upside, and even maybe a retest of the 9 EMA on the monthly chart, which is at the moment found around the level of 1.30, 130, which is like around 500 pips above. So it doesn't mean it will move directly up or immediately, but it can definitely give a push to the upside, especially if it finds support above these moving averages. And if it crosses above the 50 MA or above this level around here, more or less, if it crosses or closes above this level, looks a little bit like a reverse head and shoulders, not a perfect one, but looks similar to a reverse head and shoulders. If it crosses above it, it can make a move, like you can see here, just like I said, around 500 pips. Okay, so the head of the reverse head and shoulders is about 500 pips, and the target is the same, around 500 pips. So that's a potential move of 500 pips towards the 9 EMA or the 21 EMA on the monthly chart, and this level, which is also a resistance level, that's been broken, retested, and confirmed. So that's the potential move on pound dollar, and that's it for now. In the short time frames, for example, the hourly chart, the moving averages are definitely bullish, starting to give support to pound dollar from below. The only thing that pound dollar needs to do now in order to continue its upward momentum on the hourly chart or lower time frames is to cross above this area of supply, more or less. Okay, then I mean, it's not a perfectly clear road to go up, but it's at least in the shorter time frame, it gives way for more upward momentum as long as it crosses or closes above this area. So that's for pound dollar. Again, on the long time frame, definitely this last month's candle is quite bullish. If this month doesn't close in a bullish formation, it means more weakness. It means the reversal pattern has not been confirmed, and it's bearish for pound dollar in case it doesn't confirm the reversal pattern. Also pay attention to the fact that stochastic is almost in an oversold area. It's near the 20 mark. So again, another maybe bullish sign for pound dollar, that it's a little bit oversold after a tremendous move downward from around 142 all the way to 121, which is more than 2,000 pips. Dollar yen is continuing its upward momentum to the upside. It's really strong. It made a corrective move. I think I spoke about it a couple of weeks ago. It made a corrective move, and it stopped right at the 9 EMA. Okay, on the weekly chart, the 9 exponential moving average. It stopped there, and it gave a strong candle upward. It didn't even test previous time frames. Previous resistance level that may turn to support. It just stopped right at it at the 9 EMA and continued upwards, and it looks like now it's, after closing above this level of 130, it could continue to the upside. Last week's candle is sort of a spinning top. Okay, so on the one hand, there is a strong momentum to the upside. The 9 EMA is supportive, and it closed above it. But on the other hand, if last month's candle, not last week's, last month's candle is a spinning top, we can still see some sort of a corrective move to the downside. This is especially since this monthly candle is far away from the moving averages. When you have a spinning top far away from the moving averages, it does suggest a potential reversal or a potential corrective move. It doesn't have to happen, obviously, but just be careful, because there could be some sort of a fake out, like a fake breakout to the upside, and then a return down. You can also see that the stochastic is a little bit diverging, like a bearish divergence, and therefore you may see again a reversal, especially after last month's candle. On the very long time frame, very long time frame, like I'm talking about a multi-year pattern, we can see here this reverse head and shoulders, okay, on a multi-yearly basis. We're talking about 20 years. This is a pattern of 20 years with the head, the target of the pattern, of over almost 50,000 or 5,000 pips. Okay, so so basically we are talking about a huge potential move to the upside, but obviously after a pattern of 20 years it doesn't happen immediately, and the neckline around 124 will probably get tested at one time or another. So either it get tested from this level here, which is sort of a resistance level, or from this level here. This is a supply level, as you can see around here. Either way, it will make some sort of a reversal, I guess, in the coming days or weeks, because it's far away from, it's overstretched, it's far away from the moving averages. There are other strong levels of resistance, like the one we're at right now, or this supply level. And last month's candle is sort of a spinning top far away from the moving averages. If it goes down and retests this neckline at 124, this could, and of course gives you some sort of a confirmation, price action in the form of Morningstar, Doji, engulfing candle, spinning top, something like that. And especially if it retests this level along with one of the moving averages serving as support, this is an amazing opportunity for you. Okay, so mark this area. Any retest of this zone with price action will probably give you a huge move to the upside with a great potential trade with hundreds of pips up. So that's for dollar yen, and obviously as we'll see soon, other yen pairs as well are very, very bullish. Dollar Swiss has made a sort of a false breakout above this supply zone. It has more room to go up, but it did stop around this supply zone, which I marked a few weeks ago, and as you can see, it stopped around this level, either this level or previous resistance levels. It's a zone, it's not an accurate level, but as you can see here, there are multiple areas of resistance. So basically it stopped around this level and made a strong corrective move. Now retesting these moving averages, you can see that it pretty much hit the target of the triangle that it broke. This is like a 530 or a 550 pip triangle, and it moved even more than that. So it definitely gave the target plus change, or hit the target. I think for now, one of the best areas to look for re-entry is around this level here. Let's just pull the line around these previous highs and the 21 EMA. If it goes down here, if it crosses again above the 9 EMA, it may find support. However, again, look at the monthly chart. This is quite a bearish monthly candle. And I think, there's more chance of it going down lower, retesting this level, retesting the moving averages as they start crossing each other to the upside, maybe even retesting the upper line of the triangle or the lower line. If it reaches this whole area of the triangle, can serve as good support as well. So we can't tell if it goes down, and if it goes down, where it stops. But wherever it stops, wait for some confirmation, some price action, and take it to the upside. Obviously not on the monthly chart. The weekly chart should be good enough, and even the daily chart can give you some signals. For now, the moving averages and the trend is not very clear. The 21 EMA can serve as dynamic resistance and push the dollar Swiss further down to this area. As you can see here, resistance, previous resistance, breakout, retest, and continuation. So if it retests this level again of around 0.95 or so, that's a good support level. But wait for price action, wait for confirmation. Don't just enter upon touch. Okay, so that's for dollar Swiss. Let's have a look at dollar CAD now, which is not very clear. The trend looks like after this long move down, it made some sort of a corrective move, like sort of an upward channel, which is actually a bearish channel, because it's going up in well, you know what, maybe it's not even a channel. I would even draw something like a wedge, a rising wedge, which is very which is much more bearish, something like this. Yeah. So sort of like a pole of a flag, a bearish flag, and then the flag in the formation of a rising wedge. This is bearish, and then continuation to the downside. The Canadian dollar is strong. Obviously, it's a commodity-based currency. So as oil goes up, as gold goes up, more or less, but mostly oil, the Canadian dollar gains strength, and I think we will see oil prices moving much higher, which will also strengthen the Canadian dollar. So this whole upward movement in the dollar CAD was probably more of a corrective move. Excuse me one second please. Hello. Yeah, sorry. Excuse me for that. Some office issues here. Anyways, logistics. So basically, that's I think the direction for dollar CAD to continue moving a little bit further down. But before that, it has to break this trend line. It has to go further down, and let's have a look at the daily chart. Yeah, as you can see, there are some strong demand or support levels around here. As you can see, the level of around 124 to 125, a lot of support around here. So just be aware of this zone. In any case, I think the longer time frame is more bearish than bullish, and the monthly chart, especially after this sort of a shooting star candle, and the overall trend with this rising wedge, which is again bearish, and the crude oil prices, I think, in my opinion, there is more chance of a bearish continuation. Of course, If it does stop around this level and turn up, just be aware of this level of around 129 or so, which can serve as resistance. As you can see, it served as strong resistance, and none of the candles in the last year has managed to close above it. So that's the big picture, the bird's eye view of dollar CAD. There have been some very strong bullish candles here, engulfing bullish candles, but overall, the if I look at the very big picture, it's more bearish than bullish. Aussie dollar is I think a little bit hard to tell. When I've been looking at it in the last few months, as the moving averages have been converging, as the some candles were very bullish and some candles were more bearish, it's been hard to call or to tell the trend. I don't know. I mean, for me, as long as there's no clear breakout to the upside or to the downside, I can't tell for sure. Basically, I would at the moment trade the shorter time frames, the lower time frames, for example, the 4-hour or the 1-hour chart, where the trends are more clear. If you're looking for long swings, that's a little bit hard to tell right now where dollar CAD is heading. Look at these reversal. I mean, huge candles up, huge candles down, very unexpected, very confusing. But if you are trading if you're taking swing trades, just pay attention to areas of supply, areas of demand. If Aussie dollar does continue to the upside, then be aware of these areas. Okay, this is an area of supply. Here, an area of demand, which was broken, but it was retested and then broken and then retested again. And obviously today, we have this level of resistance, so it's hard to tell. There's a lot of resistance and a lot of support from everywhere. I can't tell you for Aussie dollar specifically where it's headed, or at least not in the long term. As for the short term, if you are trading a daily or below, the moving averages are starting to cross to the upside and can push the price or the Aussie dollar higher, again, to this area of supply, and I think it's overall the potential strength of commodities that can drive Aussie dollar, just like the Canadian dollar. It can drive the Australian dollar up against the US dollar. New Zealand dollar as well is, the trend is a little bit unclear, even though it's more bearish than bullish. It broke a 2-year support level or more. It broke below it and closed below it. 3 candles that closed below it a few weeks ago. Now retested it, arrived right at this supply or resistance level, and the 9 EMA, both serving as resistance, formed sort of a spinning top candle, or reversal candle, and we may see a push to the downside of the New Zealand dollar. At the moment, on the daily chart, it's right in between moving averages, and I think again, just like Aussie dollar, it's better trading either the shorter time frame or looking for opportunities in other currency pairs that have clearer trends. In any case, if you are looking for trades in Kiwi dollar, at least wait for it to get out of this range. It's a very clear range here, so wait for some clear confirmation either to the upside or to the downside. And of course, be aware of potential breakout, so it can close above and then immediately close below. So just be aware of the of false breakouts. And as I said, on the longer time frame, just take into account that it did close below this resistance level or support level, and now may turn to resistance around 0.6530 or so, and continue its movement to the downside towards this demand zone. So that's for Kiwi dollar. Euro pound, after a very long compression or a move downwards towards this towards this support level and demand, and after forming a few reversal candles, it managed to close above this trend line. It managed to close above the moving averages. This is a strong reversal pattern. Moving sideways, consolidating, crossing above the moving averages, coming down to retest them, and as the moving averages cross one another to the upside, they start pushing the price up. So we may see some more down a retest or some sideways movement towards the moving averages, and as the 9 EMA crosses above the 50 EMA, it has already crossed above the 21 EMA, but as the 9 EMA crosses above the 50 EMA, it starts pushing the price higher, and we will see Euro pound starting to move higher. And again, on the monthly chart, we can see some reversal patterns, some reversal candles after a very long accumulation or consolidation or compression into the demand zone. A few bullish engulfing candles as well, giving confirmation to the existence of buyers around this level. So you can see here 1, 2, 3, 4, 5, 6 engulfing candles. Okay, weekly engulfing candles. A lot of demand here from buyers, and eventually the price breaks to the upside. And with the with these confirmation candles and with the reversal of the moving averages, we may see more movement to the upside. Euro yen, and we'll go over the yen pairs quickly. So as I mentioned, dollar yen has a very strong momentum to the upside, and you can see last month's candle touching the 9 EMA, touching or almost touching this. Well, the weekly chart, it definitely tested a few weeks ago. It tested this trend line that's been broken and or breached, and now retest and a strong move to the upside. This is a classic breakout and retest move, and a continuation to the upside with a very strong pin bar coming out of the 9 EMA. Beautiful. It's absolutely beautiful. I think the target for Euro Yen is at least towards this supply zone around here. This is 145, which is around 500 pips above. Doesn't mean it will move immediately, but this is definitely a strong supply level, and the price will most definitely, or with very high chances, will try to touch it. Pay attention to the fact that this supply level is also coinciding with this resistance level around here. So here we had a false breakout, okay, a breakout and a reversal. Look at this beautiful divergence. Okay, so a higher high but lower low on the stochastic. This was a beautiful classic reversal with a fake breakout. You know, the institutionals bringing all the buyers in and then selling into the demand, into selling basically after all the buyers came in, thinking that, you know, we have a real breakout. But as you can see, the bearish divergence, you know, suggests otherwise. And basically from this level, now if price goes up all the way to this level, we may expect sellers to start coming in, and I think it will be a very strong supply level or resistance level. Pound yen, you can see this strong supply as well, or strong reversal candle. A lot of sellers coming in here. This level, you can see here all this level of resistance around here. Okay, so basically from this resistance, we haven't managed to close above this resistance yet, but with the upward momentum of yen pairs, we may see continuation to the upside. There's a lot of resistance or a lot of supply around here. So again, if price manages to go all the way up here, we may see sellers coming in around this supply level. And if we saw pound dollar, you know, with a bearish momentum, again, contradicting signals between the monthly and the weekly charts. But if the overall momentum on pound is bearish, if euro pound is going up, then we may see pound yen struggling more than euro yen to go up. Okay, so euro yen has more, looks like it has more potential to the upside than pound yen, and definitely this this weekly candle here and this reversal pattern suggests sellers could be waiting around here for more selling, and you know, you have resistance here and you have other resistance levels above. So that's for pound yen. Swiss yen, again, very similar to euro yen, super strong with this strong candle to the upside, the strong pin bar. It actually broke a very, very strong supply level, and if it manages to close above this supply level on the monthly chart, we may see more continuation to the upside. And it doesn't mean it will move again in a straight line. It could come back, retest this level before continuing up. It can also stop around this level. Okay, this could be a hammer or hanging man, which is a bearish reversal pattern. So everything is possible. The fact that it broke above this level doesn't mean it cannot reverse. You saw how it reacted, how pound yen made a false breakout with this long tail up. Even these candles, and eventually turn down. The same can happen on Swiss yen. So again, if you take a position, if you take a trade, wait for an area of some support, of some reference. Don't enter in the middle of nowhere, and don't think that if the momentum is strong, it will last. Many times institutionals want to bring in the buyers and then reverse the price at the maximum pain. That's how we call it. Maximum pain is where, you know, they attract all the sellers or the buyers and then turn the price around, where all the stops have been taken out, or all the people have come in thinking that the trend has been established, and then take them out, where the losses are the biggest for the retailers. CAD yen, as just like we saw, dollar CAD is losing momentum, so the Canadian dollar is gaining momentum, and dollar CAD has been extremely strong. But again, just like other yen pairs, it is reaching some sort of a supply level or strong resistance area. Here, as we can see, we have this whole area of supply. It's a very big supply zone. We can see supply coming all the way from this area around here and retested here with this spinning top candle and a strong reversal candle, and eventually going up again to retest this level, this time with a little bit more conviction, but it doesn't mean it will not find sellers anywhere around here. This is obviously at the tip of this spinning top is a strong resistance level, and just like I said, euro yen has resistance above, pound yen has resistance above or supply above, Swiss yen is right at the tipping point, and CAD yen as well could find more resistance around here. Aussie yen as well, just like other yen pairs. However, pay attention to the fact that it has crossed a strong trend line, closed above it, and just like Swiss yen, formed this strong candle from the 9 EMA, more upward momentum, but with strong supply zone above. So again, very, very similar. And kiwi yen, very similar as well to pound yen, with resistance right above with this weekly bearish candle. So again, overall, yen pairs do have a lot of resistance above from various resistance or supply levels. And just like I said, dollar yen itself is getting closer to a very strong supply level. So that's for all yen pairs. Let's have a quick look at Euro Swiss is not doing much at the moment, still consolidating just below the 9 EMA. Some reversal candles, potentially it could move higher, but still not a clear movement to either side. Gold is very interesting, as it has retested and even closed a little bit below this trend line, but eventually closed above it. A lot of hesitation here, as you can see on the weekly and on the daily chart. The trend at the moment is not clear. The monthly chart is sitting or getting support from the 21 EMA on the one hand. On the other hand, it closed a little bit below the 9 EMA, but above this trend line. Again, like I said, that has been broken. It's like a 1 year long, even a little bit more than that, trend line. If you see price starting to move higher from this area and crossing above these moving averages, then we may start seeing a momentum to the upside. If the price closes below these moving averages and starts getting pushed to the downside and closing again below this trend line, it may suggest more weakness for gold, for spot gold. I do want to talk about one more thing. There could be two contradicting patterns here on gold. One is sort of a cup and handle pattern here, which is a bullish pattern. Okay, this is the cup and this is the handle. Okay, a big cup and then a handle. This is a bullish pattern. On the other hand, we may see here like the handle itself could be a double top, a monthly double top. One top around 2000 or 2100, another top, and then in between these two tops a bearish divergence. If price goes down all the way down to 1700 and closes below it, then the double top pattern will be confirmed, which will probably send gold all the way down to this area of around 13 to 1400. So contradicting patterns. Now it remains to see which one will which one will eventually get fulfilled, if it's the bullish cup and handle pattern or the bearish double top pattern. Silver is, by the way, much weaker, not much of no conviction there. So let me just find it. Where is it? Yeah, so silver, as you can see, is not very clear, but it's sitting right on top of this area. Here, let me move to the monthly chart. Yeah, as you can see here, there's an area of resistance, support again, and now this support is also supported, this area is also supported by the 50 EMA, but it's in between the moving averages again. It's you know, bearish candle on the other hand, on the one hand, and support on the other hand. Hard to tell. Silver has been more volatile and a little bit weaker than gold. Silver is more widely used in industry and is less of a store of value metal. It's more used for industrial and other daily uses, whereas gold is considered as a real store of value. All right, let's go a little bit over the indices that have been added last week, and now you can trade indices. If you have any questions, speak to our supporter and go to the indices specification pages on our website, and we have some webinars, and we will continue reviewing indices more and more. So obviously, you know, as you know, the U.S. market has been in a downtrend. S&P has almost entered a bearish market, a bear market, as it has dropped almost 20% from its peak. There are several support levels around these areas, as you can see here, multiple support levels. Eventually, at the moment, it found support around the area of 3,800 or so. The moving averages have crossed to the downside. On the monthly chart, you can see how we have a couple of engulfing bearish engulfing candles. I think the long-term trend is more bearish than bullish. If after this spinning top candle, which is sitting on top of the 21 EMA, if we see an upward move, we will probably see resistance around this previous support and the 9 EMA. So S&P has a lot of resistance to the upside, and on the longer time frame, I think there is more potential to the downside. On the daily chart, at the moment, as you can see, some sideways movement in between the moving averages and below some resistance levels, but above support levels. Can't say much about the midterm movement or direction of S&P. Looks like it's kind of consolidating in a sort of a symmetrical triangle, more or less. So wait for, if you are looking for a trade with the S&P, just wait for a confirmation outside of this triangle. As for Nasdaq, it's obviously much weaker. It's already in a bear market. It has dropped more than 20% from its peak. The moving averages have already crossed to the downside, pushing the index down. Interest rates are, as interest rates rise in the US, they affect more tech stocks rather than other stocks or big stocks or consumer stocks and other value stocks. Here, growth stocks are hurt the most. And in terms of resistance, we have, as you can see here, this resistance level around 13,900 or so. 13,000. and then around, if it does manage to break above, we have more moving averages as resistance and other levels of resistance as well. However, if the price eventually continues down, one of the strongest support levels is around 10,900 or 11,000. This is a very strong support level. You can also see here the monthly candles and the 50 EMA. Eventually, we may see the price going further down and retesting this level. You can see that the stochastic keeps moving down, hasn't made it to the oversold area yet. I think if Nasdaq continues moving down, it will hit oversold area and may find some support around here. And again, daily chart, just like the S&P, is stuck in between these moving averages, moving sideways. Not a very clear trend or direction at the moment in the short time frame, with a lot of volatility, a few days up, a few days down. Be more careful with indices. I mean, they do tend to have stronger trends and long trends, but in times like these, like this one, when we have a lot of volatility in the markets, just be careful, because every day may look different, even though the trend the trend may look clear. Dow is one of the strongest U.S. indices at the moment. Has, I think, has gone down less than the other indices, but it also it has also broken a strong support level around the area of 33,000 or so. It's retesting it right now on the daily chart. Just like other indices, it's stuck in between the moving averages. Not very clear, but it's a little bit stronger than the S&P and obviously Nasdaq. Just like the S&P, it has formed this doji long-legged doji candle, stuck in between the 9 and the 21 EMA. We may see a push to the upside, some sort of a reversal around here. I'm not sure if this level obviously is a strong resistance level, the bottom of these candles and the 9 EMA, two resistance levels that can stop Dow from making further gains to the upside. So just be aware of these levels if you are trading the indices, and pay attention. The swaps over the weekend are higher than in other assets. Okay, so swaps for indices are much higher than swaps for Forex over the weekend, and be aware that there may be greater gaps or bigger gaps over the weekend for indices than what you're used to for Forex. So that's for the U.S. indices. FTSE, the UK index, has actually made a strong move upward in the last few months and weeks, unlike the US indices, but it is coming back again to this area of supply. Okay, this area of supply, which has been tested a couple of times, and you can see that there's been a lot of volatility around this area of supply. It's still pushing upward. Not sure if it will manage to push through it or not, create new highs, or eventually break above here and create some sort of a double top. But a lot of volatility again, just like the other indices, a lot of volatility in the last few weeks, and it is right below this supply level. So be careful if you're trading FTSE around here. For now, the momentum is a little bit more bullish than bearish, obviously, but this is a war zone. So preferably, if you are, if you, and you can see, look at this hourly candle with this gap up and then closing right below an engulfing bearish candle. So sellers are still waiting here. Look at these huge bearish engulfing candles. Sellers are definitely waiting here. I suggest if you are looking to go long, then wait for some support levels and moving averages or other areas of support to give you confirmation with some price action. So that's for FTSE. Looks like it's compressing into this supply zone. Okay, a lot of sellers around here. Be careful. This movement is a compression movement. It looks like distribution. Okay, and yeah, let's talk about DAX before we speak about the Nikkei. So DAX is also has gone down, but not as much as the U.S. indices. It's still the moving averages are still bullish. There is it's tested the previous support level, which was resistance before. On the monthly chart you can see resistance here, breakout, retest, and continuation to the upside. It retested this level, it went up, it's still below the 9 EMA on the monthly chart, and on the weekly chart it's right in between the moving averages, between the 9 and the 50 moving averages, or the 21 and the 50. The immediate resistance is around here. Okay, you can see support, breakout, retest, and now if it does come back all the way to this area, it may find more resistance. So in between these levels, we may see a lot of volatility. On the daily chart, again, the momentum is at the moment bullish, but very close to this area of resistance, and we have some sort of a supply zone around here as well. So just be aware of that. You are entering a war zone if you are buying into this area. And last but not least, the Nikkei, the Japanese index. If you are trading it, just be aware of the fact that the price or the profit is in yen. And the same, by the way, is for UK and for UK 100, the FTSE and the DAX. The profit in the UK 100 is in pound, so any profit you make will be multiplied by the pound dollar, or any loss will be multiplied by the pound dollar exchange rate, and obviously the margin and everything is calculated according to the pound dollar rate. The DAX is calculated by the currency, by the euro dollar exchange rate, and the Nikkei, or the Japan 225, is calculated by yen. So divide everything by 100. So the same for lots. So if you take a 0.1 lot in any of the indices, for Nikkei you need to take more lots in order to make the same profit, because the profit is in yen, which is 100, or 1 divided by 130 US dollar. So again, Nikkei as well is coming into areas of supply, and the trend at the moment is not very clear. I mean, it had formed lower lows, but it is moving higher at the moment. Can't say much about it for the time being. It's stuck. It's going a little bit. The moving averages are definitely still in a bearish in a bullish formation, and it has touched the 50 EMA and started moving higher. But there is supply above, and if the Nikkei reaches this area of supply, it may find more sellers coming here. As you can see here, this is the confirmation of the supply zone, or the decision point around here. this is where Nikkei can find or may find more resistance or more sellers. Again, if you're not very familiar with the Japanese economy and with the Japanese news, and obviously if you are not trading in the Japan trading or time zone, preferably avoid trading the Nikkei and focus on indices in your time frame or your time zone, like the US indices or the European indices. That's it for today. So I hope that you've made some, or learned a few new things, or made some decision for the week ahead. Plan your trade your plan. If you have any questions, feel free to contact our support, and see you on the following trading rooms tomorrow and on Wednesday. Have a successful trading week, and thank you for joining today. Take care. Bye-bye.